Hello there, Maverick traders. This is Rob. It is December 14th. We are one day out from the FOMC meeting, and I think the big question everyone had is the dollar going to continue to go lower? And we definitely got our answer today. In this session, we're going to talk about the day, what happened, what's some of the news. We'll take a look at all of the numbers, both in the equity markets, commodities, and then we're going to say, did anything change? Did anything change as far as our trend scores on all of our currencies? And then, of course, we always take the strongest of the currencies, pair them up against the weakest of the currencies, and those are the setups we look for.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Here's where we were 24 hours ago. We liked the yen to the long side. We liked Ethereum to the long side. I've liked Ethereum better than Bitcoin this week. And on the short side, look at that dollar. There's really only one play here, and it's dollar. The big question is, the dollar had a big fall yesterday. Was it going to bounce or was it going to continue to fall? And as you can see, let's take a look at the market performance here. You can see the dollar was the weakest and the pound was the strongest. We did hear from 3 central banks last night. We heard from the SNB, no rate change, the BOE, no rate change, and the ECB. So they all left rates unchanged. However, when you look at their statements, and specifically talking about the Bank of England, when you look at the actual votes, the Bank of England became more hawkish than it was. There was one more member that wanted to vote to raise interest rates than there was last month. That's pretty big, and that's the reason why we saw the pound as the strongest currency of the day. As you can see, your pound up the biggest, and the dollar continues its fall. I didn't get a chance to talk with our traders yesterday. I know Corey did a great job walking you through the FOMC meeting, but that was a very, very dovish meeting by the FOMC. The fact that 4 of the market participants in the Fed are looking at 100 basis points of cuts over the next year, that's very, very dovish. And I think the dollar, it's been so strong, I think it's got a whole lot longer to fall. How did that affect the rest of the markets? Well, the S&P gapped up and really just didn't have any more juice behind it. The equity markets have had a monster run. They're out of gas. There's no question they're out of gas. They're going to take a little break. Look, I don't think we pull back substantially. We could get back 1% or 2. But I think we're out of gas. This is looking very, very tired today. We'll take a look at the S&P chart and you'll see what I'm talking about. Oil, it had a bounce today, but look, oil's been absolutely dreadful for months. This little bounce has done nothing to change the downtrend on oil at the moment. And if we come over here and look at cryptos, you can see Ethereum was the best performer today, taking that lead from Bitcoin that has been the best performer earlier in this week. The big question I have, did anything change? Now we're going to look at the equity markets here, and then we're going to go in and take a look at the charts of all of the currency baskets. And we really want to ask ourselves the question, was there a major market change or is this just a continuation of what has happened? Here is what I was talking about. We had this monster rally off of this breakout of a high base. So this is a really big move in a really short period of time. When something goes parabolic, and that's what this is, you can see it goes up and up a little bit, and then has this blow off top. These things typically end in a parabolic manner as well. I'm looking at the area of somewhere around 4,600 as a possible pullback point. I don't know if it'll get there, but technically speaking, this is the point that it can pull back to and still be in a very strong uptrend. We were already at a +3. Has anything changed to move us from a +3? The answer is no. It absolutely has not. If we take a look at the schedule, pointing out what we saw here today, a lot of central bank news. So this currency market has had a lot to digest over the last 48 hours. We've had FOMC, we've had ECB, we had SNB, we had the Bank of England, Okay, we've had all this energy. What typically happens after a burst of energy? I always say it's like running a 100-yard dash. Once you get to the end of that 100-yard dash, you need to break. You need to rest. You need to catch your breath before you can sprint again. It's very highly likely to happen. We do have some China data tonight that might be a little interesting. But I feel like the market expended so much energy. I feel like we are due for a couple days of just a resting period before we can actually have a move again. I'm looking at this Friday being a pretty dull Friday. We are now in quad witching, and this is an options expiration and futures expiration. There are 4 times a year, January, April, July, September, and December, where monthly options expire, quarterly options expire, and we have futures expire. Again, 4 things expire all on this day, and it typically causes a bit of volatility. And then after that, then all of a sudden, it all calms down. I think we got a lot of short covering. I think a lot of this movement we've seen over the past 2 days is due to that options expiration. I think we're going to have to go through a period of where we just rest. I have loved this market environment. It's been a great trading environment. I have loved trading dollar yen. It's been a fantastic trade. I was very clear about this last week in the currency room that this was going to be a great week for trading. And it has been a great week for trading. And what does that mean, a great week for trading? Tradable moves that don't chop up your stop orders to where you get a move in a direction and it keeps moving in that direction long enough for you to make decent money without triggering any stops. That's been a great week this week. Going forward, I think we need to rest. I don't think it is going to be a great trading environment, at least till the middle of next week. And then we go into holiday trading, and that's typically a lower volatility period as well. We may have seen the best week we have left in the year of 2023. Let's go in and check out the currencies that moved. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? Let's first take a look at dollar. Here is our dollar chart, and you can see that we came down here, we low based, and we broke down. This is just a really good, again, this is the dollar basket, dollar equally weighted against the 7 currencies we like to trade. As you can see here, just a really nice chart. This dollar is likely going lower. Why do I say that? Yeah, we've had a big move over the last 2 days, but this move is coming after a 3-week period of a consolidation. Remember I talked about the sprint, the 100-yard dash, and then you have to take a breath? Well, we had a 100-yard dash back here. That was a big fall. We rested for almost 3 weeks. We are just fresh out of that. I still like dollar short. Are they going to be the big red candles we've seen over the last 2 days? Probably not. But if there is one trade that I still think is very possible, I think it's dollar. I think it's dollar on the long side. What do I like on the upside? Yen. Here's the yen. The yen has been bucking the trend. It's been going up while the equity markets have been going up. Why is that? Well, it's very highly suspected that the Bank of Japan is going to end their whole bond buying program, their whole everything, and let these interest rates rise as normal. As you can see, this is nothing but bullish price action. There's no question in my mind that this is where the action is. Because when I go over to other charts, let's look at CAD. CAD is basing. Once it bases, I'll get excited about it. But I'm not excited about it here. All right, let's check in on Aussie. All right. Aussie is doing nothing. Okay, well, let's check in on Kiwi. Kiwi's got to be doing something, right? Not really. We're pulling back here, pulling back from a recent high. Until that moves, again, you can see these long upper shadows where it's tried to get going and then falls right back down. Well, maybe there's something in the European currencies that I'm excited about. Here's Euro having a bounce off a bottom. Okay, I'll look at shorting a Euro pair at the end of next week. Swiss franc, nothing going on here, just flat in a range. As you can see, when you look at everything else, really the only trade is dollar yen. The pound had a little sign of life. We had some better news. We had the pound jump up a bit. But in the grand scheme of things, if you didn't know that there was a Bank of England meeting here, you would look at this candle and be like, who cares? Who cares? Who cares? There's nothing going on here other than a little pullback. And I don't see any real good upside to this. As I said, the only thing in the Forex market is dollar yen. That's the only play I see. So the question is there a better trade in the cryptos? We talked about how great Bitcoin has been. It had a pullback and it's having a nice little bounce. Bitcoin is going to be meeting up with some resistance up here at 44,000. All right, can you get excited about it up at that point? Maybe. 44,500. We're at 43,000 here. If I was going to make a trade here, it would be fairly short term and I would be cutting half or cutting the whole position. Because I think we need more energy to break through these things. I've said that I think Ethereum is not as far along in its pattern than Bitcoin. And you can see it's having a little bit better bounce here. So Ethereum's going to have the same problem up here at 2370. It's going to hit into this resistance. And we've spent a lot of energy. We're going into the last 2 weeks of the year. Do we have the ability to add on more? My opinion is we've probably seen most of the gains for 2023, and we've seen them over the last 6 weeks where we have gone up. The S&P has gone up. Just take a look at the move we've seen. This is in the Qs, 14,000 to 16,500. That is almost 20%. So we've run 20% in 6 weeks. Probably ready for a break. That is my point. We've loved the trading for the last couple of weeks. It's been great. We've seen some good profits across the board. But at this point, there's only one trade I see, and that's dollar yen. Dollar yen. We've already had a big drop. We don't like to chase it after 3 big red candles, so we're going to need to see a bounce. Here's the problem. I don't know if it's going to bounce. So the best thing you could hope for if it's not going to bounce is a long base. So if this thing can base between 141 and 142, I will look at it later on. But until that happens, really, I'm just not interested at the moment. I want to get in after it's had a long base and breaks down like it did here. Here's a base, break down, rally, sell it. Again, there's so many better times to enter a trade than right here, right now. My advice is take the rest of the week off. Come back next week with, it's probably going to be slow for the first couple of days, and then potentially make a trade later in the week. Let's go ahead and wrap this up. The move has been bullish. We've been very bullish. We've been saying the market's likely going higher. The market has done exactly that. We are still bullish, but after the market has moved so much, we're definitely less bullish. We're not bearish. We're just less bullish. We think there's going to be a rest, not continued volatility and continued moves higher. But we think the risk of any pullback here through the end of the year is relatively low. So take that for what it is. Remember, Maverick traders, trade the market in front of you, not the market you want it to be, not the market you think it should be, the market in front of you. All right, goodbye, everybody.